Hi guys, welcome back to Marant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. We're supposed to be excited tonight. AMC has announced that they've finished their offering. They raised more than $325 million by selling off 40 million shares. Now, to remind everyone, 40 million shares on a reverse stock split of 10 to 1, that would be 400 million shares. At an average price of $8.14, that means 81 cents a share. I don't know how this is a great thing. I don't know how people find out that there are bankruptcies off the table. It's not nearly enough to move the markets. But if you understand just how you're being over leveraged and how you're diluting this company, I'm going to talk about something in a minute after I show you the price action or the lack thereof. So let's go ahead and look at the stock really quick. That yellow line there is when they started selling shares. And the yellow line is going to show you that Adam Aron managed to sell everything underneath it. They announced it this day on the 6th. When they announced it, this stock dropped off of the announcement. Okay? So if Adam Aron wanted to sell his shares at a high valuation, $14 a share, whatever it may be, the minute they announced it in the pre-market, it was already going down the whole way through. The average share price is here at this gold line. So that means he didn't make nearly what he could have, what he should have, because they didn't sell a single share, it looks like, somewhere in that first day. And if they did, then it was dropping like a rock. But as you can see, it goes across the timeline. This is what they averaged, $8.14 a share. That's unfortunate for anyone who's been invested in this company. This is where he sold it. Okay. Now that we know that part, and you've been sold off in the last quarter, and I've already told you that you're going to show $1 billion loss on the balance sheet. It's going to be terrible because the goodwill impairment charge is going to hit hard. The $325 million that they raised are going to inflate the number just a tad, but we know what they're doing. They're going bankrupt, and they have to do this. They have to show good faith to you, the investor, that they're at least trying, right? But I want to change the narrative of this whole conversation. This is going to be a longer video than most because I want to talk to you guys about something. I am moved by the fact that GameStop has a movie coming out called Dumb Money. And people are going to look at the origin story of what the movement was for the stock market back in January 2021. But I also want to talk about the origin story of what AMC is. So when we do that, let's go look at it really quick. The origin story of AMC is this. In 2004, there was two companies that came to buy AMC. AMC, the movie theater, existed, guys. The one that you want to buy. The one that you want to save. And that was in 2004. It was a movie theater. In all actuality, it was actually in 2001 when they sold off to Apollo. But here was a deal between JP Morgan and their partners, JPMP, okay, and the private equity firm known as Apollo. And they sold on a 49% and a 50.1% deal. That means that the bank, JP Morgan Chase, owns AMC Movie Theaters, and Apollo owns it. That's who you're investing money with today. These guys have never shipped off ownership. Over the course of time, you might have seen a company like CCPM, I forget what it's called, it's right here on this one, CCMP Capital Advisors. When you see they bought in for $2.6 million with the Wanda Group, that is, and if you look at the history of CCMP, it's just a name change. It's still JP Morgan. Nothing's changed. So what I'm telling you guys, if you guys are paying attention to the investment, okay, way back then, 2004, AMC was already bought out by private equity. And over the last 20 years, these guys have manipulated you, the public, into thinking that they're a movie theater company. They're a hedge fund. The actual name was Marquee Holdings. Marquee Holdings, the headquarters is in Kansas City, Missouri. That's where you see AMC headquarters. That is JP Morgan. That is partnered with Apollo. It's never changed. That's why their man is in charge. Adam Aron has worked for Apollo for 25 years. There's never been a doubt. When you guys are talking about saving a movie theater company, just know that movie theater company is actually a hedge fund. It's actually a bank. It's the two together. So no matter who's in it, just know who runs it. Private equity. The original CEO of AMC when they went public was Gerardo Lopez, right? Gerardo Lopez, Jerry. He's now on the board of directors at Icon Enterprises. He's still part of private equity. The individuals in charge of these companies don't have ties to movie theaters. Kevin O'Connor, who's investor relations, the guy who's been on the board for 20 years, whatever, 22 years, he comes from these guys. They're actually private equity plants, and they have been for 20-something years. You guys have been lied to. Adam Aaron doesn't know the first thing about movies. When he got hired, he'd never worked in a movie theater a day in his life. He was not qualified to be the CEO of this company. But yet they'll tell you he was, because he can manipulate you and he can get you to think that he's doing the right thing. But from the moment he walked in and started using capital to just spread himself thin, give out special dividends, buy dead movie theaters, invent the thing called APE, they're going to tell you they're making changes and they're making moves, and they raised $325 million. The covenants are going to come back onto this company, onto the bonds themselves. They're going to be over leveraged. The goodwill impairment charge that will be evaluated on an annualized basis is going to knock your socks off on this company. If you guys don't understand balance sheets and you don't understand what's coming your way, it is extreme default. They are going to have a share price below $5 soon enough. They just diluted your float an additional 20%. And what can we do? We can tell you that bankruptcy is off the table. It's always on the table. Or else you don't do an offering. You don't offer any shares at all. If bankruptcy wasn't on the table, and they were so great with Taylor Swift and they were so great with Barbie, they don't offer their company up this way. I have one last question for everyone. Who bought the $40 million? Was it you? Are you the bag holder? I'll wait for the announcement. But I'm just going to tell you right now. When you buy an AMC share, you're actually buying a hedge fund share. They are the hedge fund. They are the private bank. Do your homework. Peace.